The global financial world has just been hit with a seismic announcement from Baghdad that could fundamentally alter the value and perception of the Iraqi dinar, shattering years of investor speculation and placing the currency on a direct and now undeniable path toward international integration and potential revaluation. The Central Bank of Iraq has not merely hinted at reforms, it has laid out a detailed, multi-phase monetary plan so ambitious that it has sent shockwaves from the trading floors of the Gulf to the highest levels of global economic policy. This is not another rumor from the basements of the internet. This is an officially sanctioned, publicly declared strategy to untangle Iraq from decades of economic isolation and drag the Iraqi dinar, kicking and screaming if necessary, into the global spotlight as a stable, reliable, and tradable currency. The core of this new plan, which we are exclusively breaking down today, revolves around a ruthless and necessary divorce from the economy of the United States dollar, a dependency that has strangled Iraq's monetary sovereignty since the 2003 invasion. For years, the vast majority of Iraq's financial transactions, from your average citizen buying a car to government funding massive infrastructure projects, have been conducted in USD, rendering the Iraqi dinar a secondary, often unstable medium of exchange within its own borders. The CBI's new roadmap aims to aggressively reverse this, forcing the domestic economy to embrace the dinar for all internal transactions, a move that will artificially create massive internal demand for the currency and begin the crucial process of establishing its intrinsic value based on Iraq's own economic output, not merely its dollar reserves. This internal remodernization is phase one, and it's already underway with stringent new regulations on local banks and exchange companies, mandating a gradual but compulsory shift to dinar-based operations. The second and arguably more explosive pillar of this plan is the strategic de-linking of the Iraqi dinar's exchange rate from the whims of the Federal Reserve. The fixed, artificial rate that has been maintained for years is being systematically dismantled in favor of a managed float, a system where the dinar's value will be allowed to fluctuate within a controlled band, reacting to genuine market forces, Iraq's oil exports, and its burgeoning non-oil economic sectors. This shift from a peg to a floating currency is the single most critical step towards achieving a real, market-driven value, and the CBI is executing it with a level of coordination with the International Monetary Fund and the World Bank that has never been seen before, signaling a profound confidence from these global institutions in Iraq's financial future. The immediate effects are already visible. In the past 48 hours alone, we have seen a significant tightening of the spread between the official and parallel market rates, key indicator that confidence is seeping back into the currency as speculators and citizens alike begin to understand the sheer inevitability of this transformation. The CBI is backing this structural shift with a terrifyingly large war chest of foreign currency reserves, reportedly at an all-time high, which it is prepared to deploy to crush any speculative attacks on the dinar and ensure a smooth, orderly transition to its new valuation. This is a financial declaration of war on the black market currency traders who have profited from the dinar's instability for 2 decades. The plan is clear, it is public, and it is irreversible, setting the stage for a chain of events that will culminate in the Iraqi dinar finally being recognized on global forex platforms, not as an exotic, high-risk fantasy, but as a legitimate, tradable emerging market currency. The sleeping giant of the Middle Eastern economy is not just waking up, it is putting on its armor and preparing for battle on the world stage, and the spoils of this war will go to the investors and nations who recognize the signs early enough to position themselves for the historic shift that is now undeniably upon us. This entire strategy is fundamentally predicated on creating an environment of undeniable and unshakable trust, both domestically and internationally, which is why the third pillar of the CBI's plan involves an unprecedented level of financial transparency and the rapid adoption of international banking and anti-money laundering standards. The government is actively working to get Iraq removed from the FATF gray list, a move that would instantly remove a major stigma that has prevented legitimate international banks from dealing directly with the Iraqi financial system. This isn't just about paperwork. It's about signaling to the world that Iraq is open for business on a level playing field, that its banks are secure, and that the flow of capital in and out of the country can be monitored, regulated, and trusted. This commitment to transparency extends to the CBI's own operations, with promises of real-time data publication on foreign reserve levels, monetary policy meeting minutes, and economic indicators, providing the kind of clarity that international investors demand before they commit billions of dollars to a new market. Furthermore, this new monetary plan is inextricably linked to the government's broader economic vision, which includes massive investment in infrastructure, agriculture, and industry designed to diversify the economy away from its near-total reliance on oil revenues. A stronger dinar in this context is not an end in itself, but a powerful tool to reduce the cost of importing the machinery and technology needed to build these new sectors, creating a virtuous cycle of investment, production, and economic growth that further strengthens the currency's foundation. The CBI understands that a currency's long-term value is not decreed by a central bank, earned through the productivity and resilience of the economy it represents, and they are now building that productive economy at a breakneck pace. The introduction of a digital dinar, a central bank digital currency, is also being fast-tracked as part of this plan not to replace physical cash, but to modernize the financial infrastructure, reduce transaction costs, and integrate seamlessly with the global digital payment systems that now dominate international trade and finance. This is a holistic, all-fronts assault on the very roots of the dinar's historical weakness, and every single action is mutually reinforcing, creating a synergistic effect that is far greater than the sum of its parts. The message from Baghdad is no longer one of hope or potential. It is a statement of fact, detailed blueprint for a financial renaissance that is already moving from the pages of a policy document into the concrete reality of the global markets. And to ignore this reality is to be left behind in an economic revolution that will redefine an entire era. The global reaction to the Central Bank of Iraq's announcement has been a fascinating and telling mix of stunned silence, cautious optimism, and in some quarters outright alarm, revealing just how much is at stake for the established global economic order. From Washington to Wall Street, the initial response has been one of calculated observation. The U.S. Treasury and Federal Reserve have not issued any official statements, but behind the scenes, analysts are scrambling to model the long-term implications of a strong, independent Iraqi dinar on American economic influence in the region and the petrodollar system itself. A sovereign and economically powerful Iraq, with a currency no longer pegged to the dollar, represents a significant geopolitical realignment, one that reduces a key lever of control that has been held for over 2 decades. Contrast this with the reaction from the Gulf Cooperation Council states, particularly the United Arab Emirates and Saudi Arabia, who have almost immediately issued statements of strong support for the CBI's measures, recognizing that a stable and prosperous Iraq is not a threat, but a monumental economic opportunity that creates a powerful new pillar for the entire Middle Eastern economy. Their vision is a regional economic bloc with an integrated financial system, and a rehabilitated Iraqi dinar is absolutely essential to that grand strategy, potentially paving the way for a future where oil trades are not solely denominated in dollars, but in a basket of currencies that includes a robust dinar. European financial institutions, particularly in the city of London and Frankfurt, have responded with a surge of analytical reports and a noticeable increase in client inquiries about exposure to Iraqi assets, indicating that the smart money is already starting to position itself for what could be the most significant emerging market currency play of the decade. The International Monetary Fund, in a carefully worded but profoundly important communique, has praised the CBI for its comprehensive and courageous reform agenda, and has confirmed it is providing technical assistance and monitoring, a seal of approval that grants the entire plan an air of legitimacy and inevitability that cannot be overstated. This global institutional backing is the rocket fuel that will propel the dinar from the fringes of speculative investment into the mainstream portfolios of international hedge funds and sovereign wealth funds, who are now legally and strategically obligated to consider it as a serious asset class. Meanwhile, the reaction on the ground in Iraq's own forex markets has been nothing short of revolutionary. The once wildly volatile parallel market has experienced a rapid and sustained convergence toward the official CBI rate, as the new regulations and the overwhelming force of the central bank's foreign reserves have made speculative shorting of the dinar a suicidal financial strategy. The black market money changers, who once operated with impunity, are now facing existential obsolescence as the formal financial system absorbs the demand for currency exchange, bringing billions of dollars worth of economic activity out of the shadows and into the taxable, regulated light of the official economy. This single development, the death of the black market premium, is perhaps the most immediate and tangible proof that this monetary plan is working, creating a unified exchange rate that is the absolute bedrock prerequisite for international platforms like Reuters and Bloomberg to even consider listing the IQD for real-time trading. The dominoes are falling in a perfect sequence, and each one brings the reality of a revalued dinar closer. For the individual investor, This means the window of opportunity that existed for buying dinar at the old, artificially suppressed rates is slamming shut with breathtaking speed. The cost of acquiring dinar is rising daily as the market corrects to its true underlying value, a value backed by one of the world's largest proven oil reserves, a young and growing population, and a strategic geographic position that is rapidly becoming a central trade corridor between East and West. The global reaction is not just news, it is a live market signal, a real-time validation of a financial transformation that is rewriting the future of Iraq and rebalancing the economic power structure of the entire region before our very eyes. This realignment is further evidenced by the surge of diplomatic and trade delegations from economic powerhouses like China, South Korea, and Germany, all descending upon Baghdad with renewed fervor, not just to discuss oil contracts, but to negotiate long-term partnerships in reconstruction technology and industrial development, partnerships that will be denominated in a basket of currencies likely to feature a steadily appreciating dinar. These nations are not waiting for the formal revaluation to be announced. They are positioning their corporations and their national wealth funds at the ground floor, securing strategic assets and influence in what they clearly see as the next major emerging market. The Chinese Belt and Road Initiative, in particular, is finding a highly receptive partner in the new Iraq. Massive infrastructure projects being fast-tracked that will inextricably link the Iraqi economy to Asian supply chains and financial hubs, further diluting the historical economic dominance of the West. This eastward pivot is a direct consequence of the new monetary independence, giving Iraq the sovereign power to choose its economic allies based on mutual benefit rather than dollar-dependent necessity. Even regional rivals like Iran and Turkey are watching these developments with a mixture of anxiety and opportunity, understanding that a financially powerful Iraq will be a far more assertive and influential neighbor, capable of dictating terms on cross-border trade, water rights, and security arrangements. The ripple effects are therefore not merely financial but profoundly geopolitical, reshaping alliances and power dynamics across the Middle East and beyond. The silence from some Western capitals is deafening. The bustling activity in Baghdad's fortified green zone and the surging trading volumes on Iraq's newly modernized stock exchange tell the true story. A new economic dawn is breaking, and the world is dividing into those who are preparing to harness its energy and those who will be left to react to a new reality they failed to anticipate. The confidence emanating from the Central Bank of Iraq is now being mirrored by Iraq's business community, major conglomerates announcing new investments, and a wave of initial public offerings being prepared, signaling a deep, organic belief in the country's sustainable economic takeoff, a belief that is now being validated by the most powerful financial institutions on the planet. We are now standing at the precipice of a financial event that most people thought they would never live to see, fundamental recalibration of a national currency that will create a new class of millionaires, reshape the economic destiny of a nation, and alter the balance of power in one of the world's most critical regions. The Central Bank of Iraq has played its hand, the global financial powers have signaled their acceptance, and the market mechanics for a historic revaluation of the Iraqi dinar are now not just in motion, but accelerating toward an inevitable conclusion. This is the moment where speculation ends and financial reality begins, where the abstract concept of a revaluation transforms into a tangible, life-altering event for everyone who has positioned themselves on the right side of history. The final phase of this plan, the one that will directly lead to the adjustment of the exchange rate you see on your screens, is a sophisticated, multi-layered process of market normalization and international certification. It begins with the sustained convergence of the official and parallel market rates, a convergence that we are witnessing in real time, which must hold stable for a predetermined period to demonstrate to the world that this is not a temporary fluctuation, but a permanent new equilibrium for the Iraqi dinar. This stability is the ultimate proof of concept, the evidence the CBI needs to present to the International Monetary Fund and the World Bank to formally certify that the Iraqi dinar has achieved a unified and stable exchange rate, a critical milestone that triggers the next phase. Following this certification, global financial data providers like Bloomberg, Reuters, and XE.com will formally update their platforms to reflect the new market-driven value of the IQD, moving it from a fixed, manually updated rate to a live, fluctuating ticker that traders around the world can buy and sell in real time, injecting massive liquidity and global demand into the currency. This official listing on major forex platforms is the moment of true birth for the dinar as a global currency, an event that will trigger an automatic review by international bond indices and emerging market funds, compelling them to allocate a percentage of their trillion-dollar portfolios to Iraqi assets. a flood of institutional capital that will drive the value of the dinar even higher. Simultaneously, the Iraqi government is poised to launch a global public relations campaign showcasing the new stability and potential of the country, targeting not just investors but also international tourists, aiming to revitalize the tourism sector in the cradle of civilization, which will bring in a steady stream of foreign currency from a completely new source, further strengthening the dinar's position. The introduction of the digital dinar will coincide with this global rollout, providing a seamless, modern mechanism for this new wave of international transactions and investments, making it as easy to buy Iraqi goods or invest in Iraqi startups as it is to buy anything online today. This is not a single event, but a cascade of interconnected financial and technological milestones, each one building upon the last, creating an unstoppable momentum toward a specific, mathematically calculable value range that reflects Iraq's true economic worth. The pre-oil wealth of Iraq based on its agriculture, water resources, and human capital, combined with its staggering oil and gas reserves, and now its strategic position as a global trade and logistics hub, supports a valuation that is multiples of its current artificial rate. The removal of the dollar peg and the death of the black market have removed the two primary anchors that have been artificially suppressing the dinar's value for decades, and now, like a coiled spring released, the market is correcting to its genuine, unmanipulated level. This correction is not speculative, it is a fundamental repricing of a national asset based on hard data, proven reserves, and verified global demand. The individuals who understand this process, who see the logical sequence of events laid out by the Central Bank of Iraq and supported by the entire international community, are the ones who will benefit the most profoundly. They are not gamblers. They are informed analysts who recognized a historic anomaly in the global financial system and had the courage to act on their conviction while the window of opportunity was still open. That window is now closing faster than anyone anticipated. The convergence of the rates is happening, the international approvals are being granted, and the global machinery of finance is engaging. The question is no longer if this will happen, but when the final formal announcement will be made, and more importantly, whether you will be holding a meaningful position in the Iraqi dinar when that announcement flashes across every news ticker in the world, triggering a buying frenzy that will make early entry impossible for the average person. The time for observation is over. The time for decisive action is now.